Good day, family. It is Portia Ladria, and I welcome you to this new video. So, as you saw the title, this video will be about trading sessions. I'm sure most of you have heard a bit about trading sessions, but if I can actually take myself back to where I started trading, I knew about trading sessions. But the honest truth was I never took trading sessions that serious because with the knowledge that I was taught, mostly when I started trading, uh, they did not put like that much focus onto trading sessions. It was not something that they went deep into. It's just like the term back testing. It was not well explained. It was all about like they teach me and afterwards they tell me that you must backtest the strategy. But the thing is they never explain how to backtest. You get me? Which is one of the things that many traders today are still facing, that their mentors tell them that you must backtest, but yet they do not understand how to backtest. They don't have a clear view of how to backtest. They don't know the right method of how to backtest. You get me? So it's just like trading sessions to me, and I got to situations whereas like I was only trading when I felt that I must trade, or when I just saw setups. I had no time of trading, which was something that is not good because in the market, guys, has its own times. The market has its own times. There's certain periods where the market spread is too much, and which means like for us institutional traders, our 2 pip stop losses, those small stop losses can be hit very quickly because of the spread in the markets, which you find that our trade has not hit our stop loss, but just because of that spread, kicked us out of the trade. So basically, I want to tell you more about sessions, and I want to educate you more about sessions and the importance of sessions. In the forex market, we have 4 sessions actually, 4 sessions, but the main forex trading sessions are the Tokyo session, the London session, and the New York session. Okay, but I mainly trade the New York and the London session. So basically, these are the times in the markets that we have, and they are the times that actually the market does something in those kind of sessions. So I know that when I enter in London and New York sessions, the market moves at that time, because you find that in the market you find situations like this, whereas the market is choppy and you are maybe on a 1 hour time frame or an H4 time frame, but the market is choppy, and you ask yourself, why when I enter trade the market starts being choppy? Why when I enter the trade the market doesn't move immediately? It just takes time to move. You get me? Yeah, you find that you are in a trade for more than 4 hours, which a trade by then should have maybe hitting your target, or maybe it's on profit, but yet it's consolidating, it's creating some range over there. So those kind of stuff are created by the sessions that you're trading. You must look onto the sessions that you trade on, because there's some sessions where the market really moves heavily, and there's some sessions where the market doesn't really move that much. The market just consolidates on it. You get me? So there are markets where it's mostly even news, fundamental news, happen on those kind of sessions. Where sessions like New York and London, that's where the market heavily moves, guys. Like it heavily moves, and that's where actually you want to enter your trade. That's where you want to enter a trade, because you don't want to be in a trade for hours, a trade that doesn't move, guys. Get me? You will end up even the trade hitting your stop loss. So the trading sessions have times, guys. Yes, I'm back. So we have sessions. And these sessions have time, where actually the market opens and closes on every sessions. So You want to get on the right sessions, guys. You want to be on the right sessions, and you want to be on the right places. So with this platform which I'm using, TradingView, it has a certain indicator which helps us with sessions. It helps us with sessions, and I'm going to show you the indicator which is very, very, very good for us, and it helps us a lot, but it just depends on you. If you want to just do it by your own self, old school, with just looking at the time and saying, okay, it's the time where the London sessions open, you can do that. You get me? But I'll just show you how you do it in TradingView. So you just go into your indicators, then you say sessions, then you will want to go to this one, session bracket all, then skill 220, this one, and just put a star on it if you want, but if not, just click it. Okay, then there it is. This is it now. So all these colors, they are sessions, trading sessions. You just go here and you say settings, then you see we have London, you have New York, and you have Asia. So over here, that's where you will say, over here, this is where you actually change the colors and you wrap up out all the sessions that you do not want to see on your charts. So I'm not using Asian. I'm not trading on the Asian session. Let's just go back to settings. I'm not trading on the Asian session. We'll just wrap up the Asian session. So basically on the, let's just say, okay. So basically, if you can see on the Asian session now, it's going to be this white one, guys. It's going to be this white ones. I don't trade on Asian sessions. It's very much rare for me to trade on Asian sessions. Let's just go back to our settings. I want to change the color. Then you come to color and you choose your color, a color that you want for your sessions. So for London session, I'll just make it this blue. Let me see this one. Yes, blue is good for me on the London session. Then on the New York session, I'll make it a bit of a purple or a pink. Let's see. No, it's not clear enough. Let's just make it this purple and see. Okay, yes. So as you can see, guys, this blue part is my London session till here. So we have in this session, we have what you call this sessions mostly do what you call a overlap. They overlap most of the time, whereas it's when the sessions meet. It's where actually the sessions meet, so they overlap. As you can see over here, this color have changed. These are only two sessions, guys. These are only two sessions, but you can see we have a darker purple, so meaning it's a mix of blue and this purple I've chosen. This is an overlap session. And when the overlap happens, because here it's only London and what, and New York, so I mean yes, it's London and New York, guys. So over there where it's London and New York, the market overlaps on this area. The market overlapped on this area, meaning they share a certain time. So let's just see over here. So this is a 6 a.m. Okay, let's see. Yeah, this is 6 a.m. when the New York market opened. The New York market opened on 6 a.m. as you can see, guys. Wait a minute. Yeah, it opened on 6 a.m. and the London, yes, it opened over here. Then the London closed on 10 a.m. actually. The London closed on 10 a.m. Then the New York opened at 6 a.m. and when it opened, the London was still also running. The London was also running. So on these areas of overlap, these are also areas that you must look for entries on, because this is where the market becomes I can say more volatile, where the market moves a lot. So these are areas that you want to also enter on. This is 4 hours actually. This is 4 hours because it's from 6 a.m. to 10 a.m. Guys. So this is where you want to enter a trade, because this is where market volatility is a lot. The volatility is a lot as the market is moving very fast, moving very fast. So guys, I hope you saw how I do all those kind of stuff. I hope you saw. So I just want to have a look into the sessions, guys. Let's just have a look into these beautiful sessions. So this area, guys, this is the Asian. This is the Asian. Then we came inside of our London. So you can see our London, what it was doing. It just went up again. Just the momentum was a sell. So the momentum was a beautiful sell. And truth, this was a fundamental candle I can see. Yeah, because it also even happened on what in a M5 time frame. This was a fundamental candle. I'm not sure, but I think so. But you can see the momentum. So you can see, guys, you can see from this London session, you can see from this London session how the market had a lot of volatility. It had a lot of volatility inside. Then when it reached this area, you can see also, and it jumped into our New York session. When it jumped into our New York session, it gave us also entries over there because because obviously we have some breakers, other breakers. We have some point of interest inside, whereas we can anticipate on taking entries onto it, where we can capitalize. So I'm back. As you can see, guys, we have entries inside of here. We have entries, and the market gives us points of interest, because if you can also look clearly on this part, we have this candle, which is a point of interest. But don't forget how we use this. This candle is not engulfed by this one, so we're going to use this one because it is engulfed by this one, as what as our IFC candle as our point of interest. So guys, saying that we take our trade over. So I just want to show you. So you take your trade over here, you take your trade over there, stop loss just over here, 11 pips. It's quite a lot. I love trading it on an M1 time frame. Then you can see you take profit. It's just over here. So it's how much? It's 1:5, guys. 1:5 risk ratio. So basically you won't close your trade there, because it just depends on how our day one is looking. Maybe over here we have our daily high, or our H4 high, or it might be also our H1 high. We are not sure if what this TP was determined, why the market has turned over there, because we haven't done a breakdown, we haven't analyzed this pair. It's just us looking. But if there was nothing that was created over there, you would have seen by the market breaking this structure. You would have seen by the market breaking this structure and also coming to mitigate it. Then you would have closed your trade over, at least over there, over here at least. After this candle, about 1:3. So you can see, guys, how the volatility of the market is on this sessions, how these sessions are traded. So you'll be able to see on my breakdowns how I make how I analyze using them. And also, if you can follow me on Instagram, you'll be able to see my analysis when I post, and saying that how did my London session go, how did my New York session go. Daily I'll be trading, I'm trading it daily always. It just depends on the setup that I'm getting from the market. If I don't get any setups, I don't force my trades and all those kind of stuff, guys. So yes, guys, don't forget to subscribe to my YouTube channel. Also, if you like this video, please give it a like. Then if you disliked it, please give it a don't please give it a dislike, and please tell me why you dislike it, so that I may be able to improve where you see that there's a problem. You see, guys. So yes, guys, these are the trading sessions. These are the trading sessions, and these are the most two trading sessions that have much liquidity, much volatility. Let's just go to this one very quickly. As you can see, the market just went up and down a bit to give us this beautiful buy entry. So let's just look deep and see if we have a bit of an IFC or a point of interest over here. So let's just go to our M1 time frame, guys. It's a bit clearer. I love M1 time frame because it's a bit clearer and you can capitalize, because even here just entered on this time frame, guys, but I can see a point of interest over here. I can see a point of interest over here, which is where the market was elapsing, and this is where I would have taken my trade, but I didn't see it. This is such a beautiful entry, guys, but yet it might be a bit, yes, but it's a beautiful trade, guys. It's a beautiful trade. Taking my trade from here, which is a mitigation. This place, it's a mitigation of this IFC candle. Taking my trade from there to then my stop loss being around here, 1:4 pip stop loss. This is why I love a M1 time frame, guys. So I'll be knowing that my trade has to break this previous high, so I know that. Then taking it maybe to the previous structure, maybe saying that my take profit is over here. This is about 1:22 risk ratio, guys. So let's just see where the market is now. So saying that we took our trade till this level, it's 1:38 risk ratio, and only on this overlap, guys, only on this overlap, because we had even a beautiful trade, guys. This was a beautiful trade, and also inside of it we had another point of interest inside of this. So you should have even placed more trades inside of this one trade, guys. You see, we have another one over here. Let's just refine it. So we had this candle. Wait a bit. With this candle there. Okay. We can beautifully see that we would have also taken our trade from this point to our take profit level, which this one is a bigger stop loss. This one is a bigger stop loss, guys. 1:38, and our stop loss being over here, 5,8. Our stop loss being 5,8. So guys, you can see 1:6 risk ratio plus that 1:38, and for a day it's good, guys. For a day it's good, and it's only in 4 hours, guys. We did this even in less than 4 hours. We did this in less than 4 hours because we entered our first trade over here, then we closed it over, saying that we closed it over maybe this point, yeah, we closed it over here. It's about 2 hours, guys. 2 hours, 2 hours to 3 hours with only this trade, securing that, and you are done. It's just in the morning. You are done with your trades. Then you go home. Just, yeah, you're done, guys. You're done. We have another one over here, point of interest. Then we would have taken our traders, the London session opened from over there. Our stop loss being just over here, 4.8. No, let's adjust that one. Okay, it's 3.8 pips stop loss. Then you can see our take profit. 1:9 risk ratio, guys. Just in the morning, 1:9 risk ratio. Then that is it, guys. That is it. You can see that is it. We have another one over here because you can see that we had a mitigation point over there. We have another one over here. Let's just see, because no, we would have missed this trade. We would have missed this trade, guys. But we can see that we have a bit of a, and yeah, even this one, it was just too close to the stop loss. It was just too close to the stop loss. We should have also taken this trade, and this would have been the buy that gave us more pips. That gave us more pips. Taking it from over here. Wait. Our stop loss just being around here, 2.7 pip stop loss. Then our take profit. It doesn't mean in these sessions, guys, you must just go crazy. No, just use a right risk management and just be disciplined. Just be disciplined, guys. Wait for the right setup, a setup that makes you happy. You know, what I like to say is that if you feel that this setup is not good for you, or you have a bit of doubts with the setup that you're taking a trade on, don't take it, guys. Don't take it. Just trust yourself. Just trust yourself. Trust your instincts that this ain't a good trade. So this is what 1:23 risk ratio. So you would have taken your buy from here, shoot, till up here. It's about a trade of 5 hours. 5 hours securing how much? The 23 plus, let's do some calculations, guys. Let's just do some calculation. 23 risk ratio plus this one is how much? Okay, let's remove this one. This is 6 pip, 1:6, then plus 38. So in the morning, only in the morning, guys, only in the morning with this trading sessions, you've made 67 pips. I mean, you've secured 3:67 risk ratio, because on every trade you risk how much? 1% of your account. So you've made how much? 3:63 risk ratio, you know. So basically, if you have $100 account, by now this is 67%. By now you are on you made $67 only in the morning, $67, and your account is standing on $167. So guys, this is it. This is it, guys. This is it. So it's not a strategy. It's just something that you need to know as a trader, and you must know the trading sessions that you take your trades on, guys. You must definitely know them, and you must know what to do on those sessions. You must know what to do on those sessions and what to wait for to take your beautiful trades, because you can see over here that we had a bit of a, let's just see, a bit of an IFC beautiful trade that we would have taken over there as the London session opened. We have also 2 mitigation, so our stop loss being just over, our stop loss just being around 4.8 pips. Then our take profit just over there, 1:11 risk ratio, guys. 1:11 risk ratio. So these are the trades that we take, guys. These are the trades that we take. And if you can just go deeper, guys, you will find more entries. It's just that you must also be careful. You must understand institutional trading before, because not every or IFC candle or other block is valid. We also look at things like this, guys, before taking it. We also look at liquidity. We also look at liquidity. As you can see over here, guys, as you can see, the market was feeling this liquidity. Also, we have liquidity. So this liquidity gave me more confidence that the trade is going to come back to what, to our AFC, to do what, to mitigate it, so that we may take our trade. And you can see, guys, and surely the market went for buys after here. You know why they are bullish? You know why the bullish have taken control over there? Look at this. Look at how much. Look at the inefficiency on this market. Look at how much imbalances are over here. You can see from this area there are a lot of imbalances, guys. Imbalances over here, imbalances over here. So what these imbalances, don't forget, these imbalances must be filled. These imbalances must be filled, and definitely the market will fill this part. You just see. So our imbalances have started from there till here, yeah, till here. Even over here the imbalances, but let's just focus on this one. So I want to show you guys, surely the market came to these areas. I told you guys, this is powerful knowledge that I'm sharing here. The market came to fill these imbalances. So you must know that, guys, imbalances must be filled. And where there is an IFC and you also see an imbalance, you must have a bit of confidence that this this IFC actually is going to be mitigated, and it is a high percentage of being mitigated. You can see over here we had imbalances. So I already knew what this buy imbalances, bullish imbalances. I already knew that the market must just come down. So my first confirmation was what was this imbalances. This bullish imbalances was a lot. My second was what was my IFC. My third one was what we just entered the London session. My fourth one was what that we immediately after the IFC candle we had what, we had a small imbalance. Then my fifth one to take the trade was what was the mitigation, that I took my trade with much more confidence, knowing that the market is just going to come down. Knowing after here we had what, a breakout structure onto this area. We had a beautiful breakout structure in this area. I knew that the market must go down and come back to what, to give us a bit of a retest. Then it's going to go down to break what, to break the structure again. Knowing that with confidence that the market is just going to break this confidence, neither what the market must break this structure. The market broke structure. I knew that it must go back to retest and go down. But over here it fell to what? It fell to break structure and it went up. So now it means that the bullish moment, the buyers had control over here, but I had to see what happened first. So look at what it did. It broke this structure, and I knew that the market must get back onto this point, and it went back. Then what happened? It broke this structure and it went back, but fell to what? Fell to break this low and went up and created what? Higher highs and higher lows. Because you can see here it's higher lows, higher high, higher low, higher high. Then that's when I knew that what, as we went into the elapse, the market now is starting to be a bullish momentum, starting to be in a bullish momentum. Over here there's a trade, there's a point of interest. Surely I can say it's this one. Look at this beautiful trade. And also I don't wanna, I'm not selling lies to you guys. I'm not selling lies to you, and I will never sell lies to you. You can see over here we had what? We had an imbalance. On this point we had what? We had an imbalance. So I knew that the market must come back here. And I'm just analyzing this pair with you guys because I did not take this trades. I was not, I took only a trade on GBP USD the sell trade. I think it was this one. Yes, I think that sell trade on GBP USD. On the London session, it was good, guys. I secured 21% on the trade. I secured 21% on the trade on GBP USD. So it was very, very good, guys. It was very, very good. So I would have taken my trade over here after the mitigation, knowing that we've entered what the elapsed session, which is now what the New York mixed with the London session. Is how much? 2,1 pip stop loss. 2,1 pip stop loss, knowing that my trade must at least I knew. So by then now I know that my trade must just be after I must take my profits after what? After the imbalances. It must definitely fill the imbalances. At least my take profit will be over here. Securing how much? 1:19 risk ratio. 1:19 risk ratio. So guys, I don't want to make this video long, but I hope you learned from this video. I hope you learned a lot from this video, and I hope it was very educational. So don't forget to do the most for the boy. Don't forget to do the most for the boy. So let's just see over here. We have we had an IFC candle over here. We had a bit of an imbalance over here, knowing that the market will have to go down, but I knew that it must come back to what? Fill this imbalance, then fill this imbalance, fill this imbalance, then what? Mitigate my area, then take my trade over here. This stop loss will be even much lower. 1:2 pips stop loss. I knew it would break structure. Take profit over here at least. 1:20 risk ratio. So guys, it seems like, when I do it, surely saying that this guy makes things easier. It's not what it seems like on the market. No guys, this needs practice. This needs practice. Trust me guys, this needs practice. Just not the skill does not just come overnight. You must practice every day. You must let the market also teach you. You must use your skills on the market, apply your skill, also backtest your skills. So guys, you must do the most. You must do the most. So I'm about to make another video which will be the breakdown. I'll see which breakdown pair I'll do, then I'll just upload it also. So guys, don't forget to comment down below and tell me what you think about this video. Please also repost this video. Don't forget to share it with your friends and family, guys. It's easy. It just takes a few minutes, even a few seconds to do this, or about 2 minutes. And to subscribe is just free, guys. To subscribe is just free. Just click that red button down below. It's something that takes only 2 minutes, even 1 minute just to click it. Then you are done. It does not need any applications or anything. Just click that subscribe button, guys, and please give it a like if you like it, and a dislike if you dislike it, and also comment down below why you dislike it. So guys, I'm just signing out. I hope this video helped you a lot.